The session open. Today is September 26, 2018, and my name is Alejandro Zambrano, and I'm the Chief Market Analyst here at Trade Captain and at Mana Financial. It's more or less 9:08 a.m. in London, and when we're doing this presentation, and it's a presentation we usually do Monday to Friday here at the live trading room at tradecaptain.com. What we're going to do over the next few minutes is provide you guys with a general overview of the markets, talk a bit about what's going to happen today. Today is the Fed rate meeting day, so that's going to be interesting. And why should you listen to me then? Well, I've been trading since 2006. I'm going to admit in the beginning I didn't know much. I did not know any technical analysis, and I struggled for quite a few years before I got the hang of it. But since 2014, I'm doing very well. So hopefully I can show you a little bit of, share some of my wisdom with you, and hopefully support you in your own trading. Now, what we're also gonna need to say as well, that this is more short-term in nature, which is much more high risky than a lot of other stuff. Trading on the daily chart, for example. Nowadays, I rather trade on a breakout on a daily rather than be in and out of the markets, and that has worked really good. But this presentation specifically, we do look quite a bit on the short-term levels. So if you do struggle in general, then maybe working with breakouts on the daily could be a better option. I'm going to show you exactly what I mean by that in a few minutes. But before we start, I need to stress that trading financial markets, unfortunately, is high risk. And today, as well, is Fed day. So in 9 hours and 50 minutes, we have the outcome of the latest Federal Reserve interest rate meeting, and they're anticipated to increase interest rates from 2% to 2.25. They will usually increase interest rates by 25 basis points or 1/4%. And what's interesting here, I think, is the economic projections. So what they think is going to happen next year primarily, and as well the press conference. The press conference starts about half an hour before the initial statement. They do release a little statement on their homepage. I strongly suggest that you check that out. And then they will read up the same statement and usually have a Q&A. And that is where it gets a little bit tricky, because people might interpret the statement in one way, and then when the Q&A is finally, when the Q&A starts, people start to probe and ask questions like, what do you actually mean by this? And then it may be that the market changes its view of things. So it's going to be very volatile. Now, what's interesting for today is that it's not so much about that. So this is what the economist projects, but the market itself is already positioned for interest rates. So the interest rate right now is at 175 to 200. Let's say it's at 200. And the likelihood of a rate hike today is at 95. So 95% probability of a rate hike. Now, this is an adjustment in the rates market. It doesn't always mean that just because everybody is pricing a rate hike, that the euro and the dollar and, the dollar in general has priced things in. But it usually is like that. What does this mean then? Well, it means that if they just increase interest rates this time around and they don't hint about what may happen next year, you might not have a strong reaction in the market. Now, one of my main themes for this year has been to actually anticipate a fourth rate hike this year, and that's something I've been saying for months. And just a few months ago, it wasn't really that obvious that was going to happen a few months ago, but now it is. So remember, the interest rate here is at 200, and it will increase into 225 today, and then on December 19th, it's anticipated that they're going to increase it with 250. All right, so that's 78 to 78% likelihood, 78.6% likelihood that it's going to be at that level, plus another 5% I think it's going to be even higher. So plus 5.1. That is 83.7, plus that final 0.1%. So that's 83.8. So there's an 83.8% likelihood that we're going to have a rate hike on December 4th. Now, what is interesting is to know I mean, the Fed has always been telling us expect a 4 rate hike. So I think that they could push towards make this almost 95%. But there's not too much like to gain here. So it's only if they go strongly on that. So what the market will be focusing on is, where are interest rates going to be maybe by the end of next year. How many times are going to increase interest rates? That is really what's more interesting, and that is going to be communicated in the dot plot, which looks like this, and also in the, not here actually, we need to go to Federal Reserve's homepage and look for the economic projections, and you want to look at those numbers. But in general, the market is aligning itself with what the Fed themselves thinks. And I personally think it would be silly for the Federal Reserve to try to say what's going to happen next year. I mean, it doesn't make sense. They don't usually work that way. But they're comfortable to say, well, in 6 months, if the economy continues like this, we're going to raise interest rates for 4 times. So I think they will do that, a bit of that. That might give the dollar a bit of a boost. But I don't think it's going to be a big mover today. Now, in regards to the euro, the fact that they're raising interest rates in US and in the Eurozone, they just now recently started to price in a rate hike, and that's going to be by end of next year. It's a little bit weird that the euro is trading where it is. If anything, it should potentially maybe, I think personally, maybe be down at 113. But the market is lifting this, and this is what I call a breakout based on the daily. You see a break here, like this one, when you take out several highs, like any pattern that is about 2 months, so 10 weeks. It is possible, of course, to trade patterns that are less than a month as well. But any sort of very good patterns are usually patterns where they're at least 2 months. Because when you have a break from those patterns, you tend to have a very, very high upward bias. So I am very selective in what I trade. Anyhow, the market pushed to the upside and move upwards. And if this is a genuine breakout, then we should move upwards. We should also not really trade below the September 20th low. Now, this could be treated as a range. If this is treated as a rectangle and just ignore this part, then the market should be trading at 120. If it's regarded as like some sort of head and shoulders, which I don't think it is, and then it should be trading even higher. It should be trading at maybe 122. So the bias is upwards. And over the last few days, I said, and even before that, I said, shares probably going to buy here. I bought some. And then I said, people will probably continue to buy here. Now, today, it's definitely a high risk event because this market could either be trading down here and we'll be stopped out, or it could be trading much higher. So, and if it trades below 117.22, then that could be a warning sign. You don't really want to see price moving below this level, because if it does, it could potentially just go to the downside. You can also see this as some sort of I wouldn't call it necessarily a rectangle, but you can see here this is difference low and high, and just to get sort of a feeling or understanding of how we can go, if we take out this double top, let's project a push towards 118.81. So I'm definitely bullish, and around these events there's two ways we can deal with it. If one is long, we could look to tighten up the stops. If you don't have any profit, it can sometimes be good to close out the position. That's actually what I did. I closed out everything yesterday. And then there's another approach. There's no right or wrong about these, by the way. And the other approach is just ignore the Fed. Don't look at the chart. Just remain bullish about 116.68. And that's sort of the end of that, really. If we do that consistently, then it tends to work out. If one is not in position, I think, ignore this for now. Maybe this break tomorrow could be interesting. Unless, of course, you have a very strong bias. I think we're going to push upwards. Another thing to keep a very close eye on today is gold. So this is gold. And if this should mimic really what the euro is doing to some extent, but this is a nice little setup. The market is clearly trading sideways between 11.87 and 12 to 14. If we take out the high, the market turned bullish. Take out the low, the market turned bearish. This is very straightforward. This is a pattern that has been developing, well, pretty much since September, but the market hit already this high on the 28th, so we spent almost a month here. So most likely, when and if we take out that range, we'll have some good momentum. In fact, you might remember how the market was trading sideways up here for quite some time in the beginning of the year. You might remember I said if we trade to the downside, I said if we take out the high, we'll turn bullish. If we take out the low, we'll turn bearish. And the market finally decided to turn bearish, and I was bearish for most of this move to the downside here. And it was a good opportunity to make some good profits here. Now we're back in a very similar situation, where if we take out the August high, we can push upwards, take out the September low, and the market can trade lower. Pound dollar, there's not much happening here. The market is clawing back losses from Friday, but on Friday, Theresa May made it very clear that EU and the UK are very, very far away from finding some sort of deal, and that pulled out the rug underneath the bullish traders. The market tumbled, and technically here it doesn't look too great. Risk reward ratio is still not good. If we buy here today, we will be 372 pips away from the nearest low and 136 points away from the nearest high. So risk reward ratio does not look too good. I don't have a very strong view on this, but I think if it can trade sideways, and then maybe eventually we can work with a bullish or maybe a bearish breakout. The longer it stays here, the better. So if it's still stuck in this range next week, then that's better than you have a break today or tomorrow. While we added, let's talk a bit about the dollar yen. So we talked about the dollar yen. I did an update for you as well, and I said a break to the upside here should lift things. You might remember the market was very choppy here, and I ignored it. I told you at that point to trade stocks, indices and things like that, so at least that's what I was doing. And then we finally took out the high and then moved down lower. We spent a few days here and the market moved upwards. Check out, I did an article yesterday. If you click here on TC authors on the bottom of the page, and then full bio and recent articles, you can see that I did an article. So you will need to, we only show the three last ones here, but we finally added this thing. So you can see this one. It's called US 10-year government bond yield nears 2018 high, supports higher dollar yen. Check this out. This is a long-term view on the dollar yen and correlation between bond yields. And the way things look right now, dollar yen could potentially continue to trade much higher. So I'm very excited about this. You should definitely check that out. In regards to crude oil, this is US oil. We talked about this in the past, and I said to you guys, take out the high here, we're probably gonna head higher. I said as well yesterday, if we move down to maybe 71.81, I think Treasury's gonna buy, and it's looking all good. This market is clearly in a bull trend, and I think we're gonna head higher. This is a nice little move you're looking at here. You can see how the market moved down lower and is pushing upwards, and hopefully just moves upwards. And when this looks like this, I think if we take out this high, it will be possible to reduce the stop loss from 71.13 to pretty much 71.63. And at that point, I guess most of you guys will be in break even and just enjoying the ride to the upside. I traded Brent crude, and I traded the breakout from here. I decided to book profits yesterday. I actually closed out all my positions, and my account is today up with 53% on the year. There's nothing wrong with Brent crude, being long this market. I talked about the break here to the upside, and I do think we're going to head up maybe to 85, 86. But in my account, the way my numbers look like and the way all the different positions I hold, and my personal circumstances, it makes perfect sense to close everything out. S&P is looking good. This is something we talked about. Even when we were down here, we said, look for this to head to the upside. It's heading upwards. We talked about an 8% move in the S&P 500 on the break here. The market moved up so far with a total of 5%, so we still have a bit more to go until we reach that target. And over the last few days, I did a little update. I said this is a ascending rectangle and ascending triangle, and I said a break here should take you higher. I'm saying look for this to bottom out. It's looking okay. I think if we take out this level here, which is the high from yesterday, we'll revert back to this high and then potentially upwards. I think at that point it will be possible to reduce the stop loss. Now the original stop loss was 29.01, and then that could be reduced to 28.08, 29.08 to minimize, because if you're long, you should be long from here, so you have a tiny risk. It's up to you really. If you bought here, I would probably just left it here to reduce the risk, because it's not that nice when you have a nice little profit and then it goes all the way down. It gets you stopped out for the full risk. Now, if traders are not long, I think they are buying here. That's exactly what you're seeing in these candles, and I think we can head to the upside. In regards to the German DAX, the market is, as you see, it's in a downtrend, and this market here is struggling to trade higher. Why? Because it's not in an overall upward trend, and because of that, I think it will continue to be difficult to trade this market, and I think this could potentially go lower. Now, if I'm right about all the other markets, then most likely you'll see this market trade more sideways, and then when we take out these highs, yes, I look to get involved. But right now, this is a market for people that love range-bound markets. It's been range-bound since June 2017, and unless you have a good range-bound system, and I don't, then it's just gonna be a boring market, very difficult to make any money on this. So that's why I am ignoring it, and except when interesting things happen. And I think we will have something interesting happening. But to break the lower end here, this market needs to collapse with 5%, or it needs to rally with 10%. So the likelihood of having a break out of this range anytime soon, I mean, pencil that down for maybe 2019 or something like that. It will continue to be a market that is trading sideways, and it's very difficult to do anything with. Let's talk a bit about cryptos. Bitcoin is not doing too much, and it's creating these lower and lower highs. It reminds me a lot about the DAX, actually. You see it's in a downtrend, so people don't want to buy things that are in a downtrend. And this, let's hope it stays here for at least a week more, because then this is going to be the new high. And when we take out that new high, I think we could potentially turn bullish to buy some, let it go up to the September high, and then probably lower again, and then potentially upwards. But the overall interpretation of this pattern, guys, this is a bearish pattern. So if we take out 5,786, then this will probably cause this market to go lower. You see the difference between this level here and this level here is about 41%, and difference in this level here and this level here is pretty much 41%. If you take it from the base of the pattern, it's just a 49% decline, and that suggests we'll go down to 2,900. Also, historically, Bitcoin, I think it has declined with about 90% in the past, 95 I think. So if it goes down to a grand again, so 9,923, then that would not be surprising. This market has in the past had some crazy declines, and it will probably continue to have these crazy declines going forward as well. Here from December 2013 down to a low here in Jan was 87% decline. From this high here to this low here, it was an 84% decline. So you can see here that volatility is strong. Now this market is more mature now. It's owned by far more people than before, so maybe we'll see less of a decline. But we have so far declined with 67%, so it's not really in those extreme levels. And again, if we go down 80, down to these levels I said in the past, then yeah. Finally, this is Ripple, and Ripple is stabilizing. So the Ripple gained from 25 cents all the way up to 76 cents. So that's a 200% return. The market moved upwards, trading sideways. Not much happening here right now. I am very, very hesitant to have a very strong view on Ripple. Ethereum is still in a downtrend. We said it could probably roll over here, and it definitely looks like it did roll over here. Could easily continue to trade lower. I have Bitcoin Cash as well. We said it could potentially roll over here. Then I pushed up the sell level to 5,042. Sorry, so we missed that out. But the market did revert from that level here. And we have EOS, some sort of a wedge, and Litecoin as well, not doing too good. So a majority of all these coins are just trading sideways right now, and it's likely that either they continue to drift lower in line with the big picture, or just trade sideways, which means that Ripple, it's on its own. Unless it starts to see support from all the other coins, it's going to be difficult to see Ripple trade much higher. Okay, I think we're going to wrap things up. It's 9:29 a.m. in London. Okay, good. So we don't have any questions. So we're going to wrap things up. Guys, have a great day. David, thanks so much for joining me in the chat box this morning. Guys, don't forget to like the video, and that's it. So I got a quick question here from David. So the Nikkei, I booked profits in that market. Let me show you. So this is the Japanese stock market, the Nikkei. It depends on which contract you're trading, but sorry, that's Brent crude. This is the Nikkei. And the Nikkei, this is one of those setups that is sort of amazing to work with. Not amazing, that's just wrong. But good quality setups. You see here, this market reached a high in May, and then in June rejected from the same level, in July again, and August again. So this was a nice solid few months of trading sideways and forming a bit of a weird head and shoulders with a left shoulder, right shoulder, head. And this market projects a target of 7%, which in essence tells you that we're gonna hit something like 24,515. I bought on the breakout. Actually, I didn't buy on the initial breakout. I bought on the second day. So we had the breakout on the 14th. At the market closed on the 17th, I bought at 23,171, and yesterday I closed pretty much around the high, so around 24,000, more or less. Here, again, I booked this because I needed it. It was a nice return, and if I was still long, I would maintain. It depends really what you want to do, but I booked half of the position already here a few days ago. So the rest had a stop loss at 23,570, and then I would have just let the stop here, and if it goes down, just take the reminder. But here, it would be a bit sad to let go of all the profits. So I think as long as you trade above the September 4th low, and that would be it's a line in the sand. We are at a high, so we should have some sort of reaction. Obviously the trend is bullish, so I do think we're probably going to break the high eventually. But these things don't move in a straight line, so if it goes down and then up and then upwards, and that would not surprise me. That's what I might do, look to get involved on that dip. But right now I'm totally out of the market. I'm holding no positions at all. Booked profits here, booked profits in CAD yen and Brent crude, and in euro dollar I booked a tiny profit as well. If you want to keep track of what I'm up to, this is my Twitter page. You obviously follow Trade Captain, but this is my Twitter page. I do share, I don't share everything what I trade, definitely not, but I do share some good ideas and things I'm watching. I retweet as well Trade Captain's some article from Trade Captain and other things that I found interesting. So make sure you follow me on AlexFX00. If you have any questions, you're most welcome to send me a direct message in here and I'll read it and I'll come back to you. Alternatively, you can always email me at azambrano@tradecaptain.com. Have a good day, guys, and I'll see you guys tomorrow. Thanks.